Have you ever wondered about investing in the TSLY ETF? This fund, formerly known as the YieldMax TSLA Option Income Strategy ETF, is an actively managed exchange-traded fund. Its primary aim is to generate current income while also providing the opportunity for exposure to the share price returns of Tesla Inc. Quite a unique blend, isn't it? Now, to achieve this, the fund employs a synthetic covered call strategy. This approach allows it to generate income and maintain exposure to the share price returns of Tesla. However, it's worth noting that there's a limit on potential investment gains due to the nature of the options strategy it employs. The fund is committed to this strategy even during adverse market, economic or other conditions and does not seek to take temporary defensive positions. Now that you have a basic understanding of what TSLY ETF is, let's delve into its features. So, what are the key features of the TSLY ETF that make it an interesting investment option? The YieldMax TSLA Option Income Strategy ETF, or TSLI for short, is a unique investment tool that falls under the non-traditional equity asset class. In simpler terms, this means it's not your typical stock or bond fund. It's a bit more adventurous, seeking to provide income through a synthetic covered call strategy focused on the common stock of Tesla Inc. This fund falls into the derivative income category. This essentially means that it generates income from financial instruments derived from other assets, in this case options on Tesla's stock. Now let's talk about yield. The yield of TSLY is staggering at 94.95%. This is the income return on an investment, which is a significant contributing factor to its total return. The fund's assets are valued at around $727.28 million. Quite an impressive figure, isn't it? These assets are spread across a total of 7 holdings, 2 of which are equity holdings, with 1 bond holding. The turnover of the fund is 168%. Turnover refers to the rate at which the fund's holdings are exchanged for other assets within a year. A higher turnover can mean higher transaction costs, but it can also mean the fund is actively managed and adapting to market conditions. The expense ratio for TSLY is 0.99%. This is the annual fee that all funds or ETFs charge their shareholders. It represents the percentage of the fund's total assets that are used for administrative, management, advertising, and all other expenses. Finally, the inception date. The TSLY ETF was introduced on the 22nd of November 2022. So it's a relatively new player in the game, but it's certainly making waves. These features make TSLY ETF a unique investment tool. But let's not stop here, let's look at its performance. How well has TSLY ETF performed since its inception? Let's dive right in. The YieldMax TSLA Option Income Strategy ETF, also known as TSLI, started with an initial balance of $10,000. Over time, this has dipped to a final balance of $7,998, marking a decrease of 15.42%. Now that might seem a bit discouraging, but let's put it into perspective. The compound annual growth rate, or KGR, stands at a robust 50.55%. This rate represents the mean annual growth rate of an investment over a specified period of time longer than 1 year. It essentially gives us a smooth, annualized picture of the fund's growth trajectory. As for the fund's volatility, the standard deviation was negative 31.92%. This measure tells us how much the return on an investment is deviating from the expected normal returns, indicating the level of risk or volatility. In terms of annual performance, both the best and worst year recorded a return of negative 31.92%. This suggests that the fund's returns have been quite consistent, albeit negative. The maximum drawdown, which is the largest single drop from peak to bottom in the value of a portfolio, is yet to be calculated. This factor is crucial as it helps investors understand the worst-case scenario for the fund. Our last 2 metrics, the Sharpe ratio and Sortino ratio, were negative 0.11 and negative 0.15, respectively. These ratios help us understand the return of an investment compared to its risk. Despite being in the negative, it's important to remember that higher absolute values generally indicate better risk-adjusted performance. Finally, the fund has a market correlation of 0.55, showing a moderate positive relationship with the market. The performance of the TSLY ETF gives us an insight into its past, but it's also important to understand the risks involved. Investing in any financial instrument comes with its share of risks. What are the risks associated with TSLY ETF? Firstly, the fund's strategy can cap its potential gains if Tesla shares increase in value. This means that while the fund offers exposure to Tesla's share price returns, there's a limit to the profits you could potentially make if Tesla's stock price soars. Secondly, the fund is vulnerable to potential losses if Tesla shares decrease in value. These losses may not be offset by the income received by the fund, making it a riskier proposition during market downturns. Also, bear in mind that the fund does not invest directly in Tesla. Therefore, your investment in the fund is not an investment in Tesla itself. This can impact your potential returns, especially if you're banking on Tesla's performance. Lastly, fund shareholders are not entitled to any Tesla dividends. This means you won't receive any payouts if Tesla decides to distribute profits to its shareholders. As with any investment, it's crucial to weigh the potential rewards against the risks before making a decision.